Hi there, viewers. Welcome back to the Money Show. You're watching ET now. Let's keep it going with all your queries. Then, in fact, let's kickstart with an email query coming in from our viewers. But before that, now, viewers, it's important to also know that there are plethora of funds available in the market to invest your hard-earned money in. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? To help you navigate through this maze, we have back with us Nisreen Mamaji, CFP Moneyworks Financial Services. And also on that note, do not forget to send us your portfolio queries on our WhatsApp number 865-797-4571, or remember you can also email us your queries on the Money Show at etnow.tv. But on that note then, viewers, let's kickstart with our first query, our viewer query coming in from Mr. Amit Kumar, aged 43 years, from West Bengal. Now, Nisreen, this is an email query, so I'm going to be reading out the query to you. He's been doing SIPs since 2011. He was firstly passionate about this, and he's also done tax saving in ELSS funds. He has gradually increased his SIP investments and currently investing about 80,000 rupees per month in SIPs in all types of funds. Now, this viewer very interestingly has given us a list of 43 funds in which he has made SIPs and invested his 80,000 rupees on a monthly basis. Nisreen, couple of questions on this. It's very rare that we get a query like this. First of all, do you believe having 43 funds in your portfolio is a prudent thing to do? What's the max number of funds that you would recommend a viewer to have?
Yes. So first, let me congratulate Amit Kumarji for having started this financial journey and also taken the initiative to invest in mutual funds. So I think that will take you a long way. Only thing that you have to err on the side of caution and not have such a plethora of mutual funds in your basket, because you yourself will not be able to keep track of the number of funds. You see, and the problem is that there's a lot of duplication of stocks in your portfolio. So if we run it through a duplicator, we will find that, the stocks that you have are all very similar. So it's not making sense for you to have such a variety of 43 mutual funds in anyone's portfolio, because it's going to be physically impossible for you to keep a track, and, very difficult for you to decide what to stop, what to start, what to continue. And also, if you're in need of funds, what should I redeem? Because anybody who invests for a period of time, there will be short term or long term or medium term, liquidity requirements, which you are not able to foresee at this point of time. So 80,000 rupees is fantastic that you're starting this SIP and continuing, but there is no need to have so many funds. Okay. So we have already done the entire groundwork for you, and we've kind of tried to concise your, entire portfolio to some extent. I will, take you through some of them personally, and I'm sure they will also flash on the screen. So basically, your ABSL digital fund will go alphabetically. You can stop and start in the Tata digital fund, because you have the same, investment in both. Now you have HDFC Defense Fund, HDFC Manufacturing Fund, Nippon India Banking Fund, Nippon India Power and Infra, SBI PSU, SBI Energy Opportunities. So what I recommend is that any of these thematic funds, you stop the individual SIPs, and that entire amount you reinvest it into ICICI Prudential's thematic fund of funds. Okay. So let the fund manager decide which themes are popular at this point and what they see a future in, rather than you picking a thematic call. Okay. Because you will not know whether you should continue with digital, continue with defense, stop infra, continue with the PSU or the energy opportunities, and so on and so forth. So the entire thematic funds, I would suggest that you stop them. And if you're investing, say 10 or 15,000 across all these themes, you restart the SIP into ICICI Prudential thematic fund of funds. That will be a better strategy for you. Now, all the blue chip funds also, that you should only continue with one, that is ICICI Blue Chip. So, don't have Axis and Franklin and ICICI, just put the entire 3,000 rupees into the ICICI Prudential Blue Chip Fund. So on and so forth for the entire logic. If you're investing in the large and mid cap, you can put all the money of large and mid cap into the Tata large and mid cap fund. Okay. So don't do 1,000 in individual funds like this. Rather than that, do not have more than 10 to 15 mutual funds in your portfolio. Select 5 or 6, themes or broad asset allocations. One would be the thematic fund of funds. Don't go beyond 50 to 20% in that. Go for a large and mid category. Go for a multi-cap category. Go for a flexi-cap category. And one going for the hybrid category, So 20 to 25%, a hybrid category would be something like a balanced advantage fund or an aggressive hybrid equity fund, which you can, use maybe for your shorter term requirements. And so 20 to 25% of your portfolio should be just in one of these funds. Large and mid, you select one option. Flexi cap, you select one option, and multi cap, you select one option. So don't have, 43 funds for sure. Maximum, you can have 2 funds in every asset allocator, like every sector that we just discussed. And so you should have maximum about, 10 or 12 mutual funds. And in the asset allocation, you should have 10, 12, different kind of categories, maximum 6 categories and 12 mutual funds, 2 in each. So, do have a look at this entire, 43 funds that you have. We will be flashing it on screen, all the discussions that we've been having so far. In the mid cap, you can go in for only HDFC mid cap opportunities. In the small cap, you can go for ICICI small cap. And in the flexi cap, you can only go for one, which is a Bandhan. In the multi cap, only go for Nippon. And I think so on and so forth. We have, given you quite a lot of options of stopping and restarting. And in each of the funds, if you're investing a total of 80,000, so in each category, you should be about invested 20,000 rupees. So between 15 to 20,000 rupees and 5 categories, 12 funds. So do concise it. I've given you a lot of information to digest, and I hope that you will be able to use this information. Okay. So anyways, your future value in 2030, which is about, 6 years away, if we calculate that your compounded annualized growth rate is about 12%, will be about 1.41 crore. And in 2035, if we again, talk about getting an expected compounded annualized growth rate of 12%, it will be 3.2 crores. So this is what you're looking at if you are able to achieve a 12% compounded annualized growth rate up to 2030 or up to 2035. So all the very best. Make sure that you use the recommendations mentioned, and you concise your portfolio to the best possible way. So don't sell anything or don't redeem and undertake any taxation on any of the funds that you have invested in. The recommendation is to stop and restart rather than selling or redeeming and taking the liability of paying the taxes that you have so far earned in the capital gains in the current funds. So I hope that is you have understood what I'm trying to communicate.
Thank you so much for taking us through a very detailed explanation of that query. It's very rare that we see a query like that where a viewer has asked us 43 funds. But thank you so much for being so patient and so concise and meticulous with your recommendations as well. But on that note, Nisreen, here's another query for you coming from our viewer Anita, where she's saying that she's asking, in fact, which is the safe platform to buy direct mutual funds and what are the factors that one should consider while buying direct mutual funds. So what's your answer to that? How would you help her out?
Sure, Anita. So, when you want to buy directly, you can, go to any of the company's websites and you can buy directly from the AMC website, which will have the direct mutual fund option. But what are the factors that you should be considering are basically, you have to be very clear what is your goal. Okay, whether you're investing for the short term, you want to buy a car, you want to go on a holiday, you're investing for the long term, like such as retirement or your child's education, or you have a goal of purchasing a home in future. So be very clear on your short term, medium term, and long term goals. Secondly, you have to also assess the level of risk that you're willing to take. Now, equity funds will tend to be a little more riskier, but they have the highest potential over the long term. Okay. There is debt funds which are always safer, but they will offer you a lower return. So you have to be, quite aware of whether you are investing, what is your own risk tolerance, what is your risk capacity, who are the dependents on your current income, and, will you be working for the longer period of time? Will you have the ability to continue the lump sum or SIP investments over a period of time? Do you also have, any kind of person that you can depend on in case you have a financial issue in future? So these are some of the questions that you have to ask yourself. And also you have to continuously review the portfolio performance, over different time periods, 1 year, 3 year, 5 year before you invest. And also after you invest, you will have to continuously review and make sure that you are on the right track, that, your funds or your portfolio is giving you the required return at the time that you need it. So suppose you have a choice of, a dream that you want to have an international education, an international holiday, say 3 years down the line, and you are setting aside, say, 10,000 rupee SIP for that. And as an example, just sharing with you. So at the end of 3 years, will you have those resources to be able to buy your ticket and also spend, on your daily travel, as well as food and maybe, small shopping that you might have on your list. So make sure that the entire goal is very well defined in current terms, either in dollars or in euros. I'm just giving an example of an international holiday. It could very well be a big asset purchase. You may want to buy a vehicle. You might want to put a down payment on a house. So whatever that goal is, you have to be very clear about what you need to do. So direct mutual funds are an option, but it will all be like a do-it-yourself kit for yourself. The entire responsibility on being systematic, on being disciplined, on making sure that your SIPs continue, that you don't pause, that you don't stop. Because every time you miss an SIP, the banker will charge you a certain amount as an expense, that will be debited from your bank account.
Okay.
So you have to make sure that this SIP amount is in your bank account. So these
Okay.
are some of the things that you need to be know as a direct investor.
Okay, Nisreen, thank you so much for taking the time out to join us and help our viewers with their queries, as well as understand the importance of upskilling, reskilling and student loans in the previous segment. On that note, we'll have to let you go. But viewers, it's a wrap on this edition of The Money Show. Thank you so much for watching. But remember to keep writing to us via our WhatsApp number or our email ID. But it's a goodbye from me and the team that put this show together. Thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.